I think probably of more concern to most people in the markets at this stage is oil at $123 a barrel. Bridget Taylor over at Nedbank Capital saying many people out there saying it could go to $130 in the short term. Do you think that's possible?
Stephen, anything is possible in the oil market, first of all. And secondly, I think why oil is such a big concern is it affects all of us in some way or another. It has a direct impact in your life and in your back pocket, effectively. As long as these unrest and these concerns are going on, we are going to push higher, most probably. Right now, we in pretty much open territory. We had $147 a barrel highest in 2008. So right now, it looks like pretty much an open picture to the upside. And the way that the momentum is carrying this price, I would not be surprised at all to see it at 130 by the end of next week even. You know, which is quite an ambitious thing to say, but currently there's absolutely no stopping it.
I suppose with gold at these levels, the answer could be to sell your gold jewellery and fill up your petrol tank.
Yeah, it seems like it, doesn't it?
We had China yesterday raising interest rates, and there seems to be a pretty muted reaction from the market. So do you think those North African worries are really overshadowing everything else?
I think what most probably happened with China is they've been stocking, you know, for quite a while. So they almost anticipated this inflationary pressures. So they've been pushing the prices higher with stocking up and with you know, making sure that they have the capacity to actually have enough supply at the moment. So I think almost what happened with them is they've stocked up, and now suddenly we're at these levels, and the market reacted by about 60 cents on the Brent when that came out. So it had a very, very small effect, and I think China has been pushing it, and you know, and the other side of the coin is obviously the whole inflation debate that's definitely going to have an influence.
Do you think the market's become a little more comfortable with how China is treating monetary policy at this stage, that it had signaled it would be raising interest rates, it's doing so gradually, and manufacturing production is still managing to hold up? We had those PMI data out on Monday, still looking pretty strong from China, so it seems able to absorb these interest rate increases.
Yeah, I think you're right. I think there was absolutely no surprise yesterday in terms of the 0.25% rate hike. So it was very much anticipated, and as I say, I think the market reacted so, you know, in such an insignificant way almost, that it's definitely been priced in the past.
We've also seen copper rising as well, around $9,500 a tonne. They're still down from the $10,000 that hit a few months ago. Do you think we're seeing support for copper? Do you think that support is coming from anticipated demand from China and also anticipated demand from Japan as it starts to rebuild damaged infrastructure?
The whole copper argument and what it's doing to China has definitely always been, but they've been stocking up so much. And the problem fundamentally with copper is you never actually know how much stock is floating around in warehouses. So you never, you know, you have any shortage, and yes, there's a deficit over the coming year. There will be a deficit, but you don't know if it's going to be 150,000 tons or it's going to be 700,000 tons. And so it's very difficult to actually pinpoint anything on copper. And I think what happened in Japan will probably have a bit of an influence still in the copper price, but I can't see that having a significant influence at the moment.
So while we have some players talking about copper going to $11,000 a tonne in the second half of the year, do you think that's maybe just a bit too ambitious?
I think it's maybe a little bit soon to say that. I don't think it's too ambitious. I just think right now, in terms of what are we going to end up with, how many stocks, how many suppliers, what is our real demand actually going to come out to, is a debate that is so difficult in the copper market.
How about investment demand? Are we still seeing investment demand coming through for metals like copper?
I think it'll always be there in a certain sense, and you know, commodities are way past the point of actually being traded as a fundamentally driven market only. There's definitely an asset class, and yes, it's definitely in copper as well. And I think, you know, when we came back a couple of years ago from $35, $40 a barrel, there was definitely some speculation and some investor demand coming through there.
Gold getting a bit of support from inflationary expectations. We had China yesterday raising interest rates, as we've chatted about. We've got the Bank of England, the ECB, the Bank of Japan all meeting at this stage. ECB expected to raise interest rates tomorrow. Do you think this was a short-term spike we've seen in the gold price? Do you think we could see it retreat after we get those rates decisions tomorrow?
You know, Stephen, gold is a funny product, because it's almost like it gets stuck and then it moves, and it gets stuck and and it moves very, very quickly. And I think, once again, I think we're back to did the world anticipate these inflation effects, previously? And is that why we rallied so hard? I think we need to look at both sides of that argument, definitely, because the world must have anticipated it. The problem we're sitting with is the inflation we are going to have is artificially created. It's not an inflation that's born out of times being good. It is inflation out of times actually being terrible. So it's artificially created, and I think that might have almost an opposite effect than we expect on gold, although I would not go as far as saying going back to $1,300 an ounce, definitely not. It's just something that you need to be aware of. Has the inflation pressures been priced in, and how far can it still go if we really see that inflation coming through? Because as I say, the base of the inflation being born is way different than in normal circumstances.
To what extent do you think the spike we've seen in commodity prices over the past couple of days, so oil, copper, gold, is really a feature of that dollar weakness we've seen coming through, with that dollar weakening to 143 against the euro?
It's definitely had an influence, although the correlation is definitely not as strong as it used to be in the past. I think almost often what the market does is, ooh, the dollar is weak, that's why commodities is higher. I don't think it's necessarily always a rule. And that correlation is also not stable at all times. If you look at different time periods, it's quite, almost an unstable correlation to a certain extent. So yes, it has an influence, but I don't think it's that significant. I do think that the oil market has been fundamentally driven to a certain extent. I think the copper market's been fundamentally driven, and the gold market's been driven by inflation, by inflation concerns.